guys, John here, forexfire. Right, so you'll have to bear with us for 2 seconds. Just something I want to put together for you. I'm taking a bit of a rest from the homework this week. However, I just want to give you a general concept of something that I'm going to be looking towards and bringing into the group with regards to smart money and scalping. You've been watching me for a while, for the last couple of weeks I'm doing this, and it's something that I'm going to showcase to you. But again, it's working along the principles of waiting for, let's say, a liquidity area taken out and a certain continuation on the candle. I'm just going to head over to a chart to give you a general concept of what it's about and a rundown. Okay, from there we might implement this into things like supply and demand and other stuff. Okay, so I'm going to head over to the charts. I'm just going to show you something that will sort of pique your interest on how we get our confluence and sort of confirmation areas, even from doing looking at these liquidity areas, how liquidity can just be taken out and then a continuation down. So I think this sharing screen now is going to give you a bit more of an insight on that. So let's just share the screen there. Let's have a look. Right, so make this bigger. So what we've got, again, taking notice of this red and green at the moment. There's a lot of you know what this sort of stuff is. It was something that I implemented into another structure from another group I was with, but I've sort of kept a hold of the general concept of it, where the green and the reds give you a buy and sell indication. However, it is lagging, so I don't tend to rely on the lagging indicators as such, but it's there for a general purpose. From there, what I just want to show you, I'm getting in on a trade. Okay, and I'm just going to delete that. Now, this is where you're going to make my handsome face that little bit bigger. Let's have a look. There we are. Right. So what we got is, when we are looking at liquidity areas or equal highs and equal lows, the general concept is this sort of preference like this. Okay. That there is an equal area. Okay. Even this here will be classed as an equal area. Okay. Now, this here was an equal area. Okay. Until we grabbed liquidity. Okay. Now, if I just go back on these, what I'm in on the moment, I'm in on a trade which is a risk of 1 to 3. Yeah, it's in a little bit of drawdown, but again, we could say we've got a supply area here. However, this grabbed my attention, and again, this is what comes to a trained eye. Okay, from here, to make this bigger, we've got a liquidity area. Okay, equal highs. And if you look, there has been a liquidity grab. So as you notice, okay, we had a massive bang. Okay, so if we just put on our fibs, top to bottom, okay, we generally have, going on the concept, 50% area. Okay, and I make this yellow because that's the colors I normally like to use. Just get rid of that noise. Okay, we've came back from the impulse move. We've come back to test the 50% quite well. Okay, now if I put the quad areas back on, okay, let's just get this correct, John, top to bottom. Okay, you could possibly have had an entry on this sort of area with a stop loss just above here. However, I got in on the trade a little bit earlier. I've got in on here. I've got the stop loss just above the 25 area, because there's be 25, the half, the 75, and then the 1. The top one will be the 0. Okay. Now, just to go a little bit more in depth and show you the magic. Okay, let's get rid of that, get rid of that. Get rid of that, and we'll get rid of that. Now, I've shown you here as a closer in depth. Okay, now watch this. What you've got is liquidity formed on this impulse on the move down. Okay, as we've come down, and let's just get the Forex magic wand out, Forex fire magic wand. As we've come out of here, we started to come back towards this area. Okay, the 50% was breached. We've come up and we were either going to take this liquidity area or there's a liquidity area here on the 1 hour time frame. Okay, we can see clearly going across following the arrow that the equals here was taken out by a pip or a pipette. Okay, now I normally drill down my 1 hour down to the 15 minute. I'll go in sort of segments. And if I'm watching anything on the 1 hour, I will generally drop it down to a 15-minute chart. Now watch this, guys. Let's just take it off 15 minutes. Now what you have, and we go on supply and demand, the last up before the down. Okay. Get the magic wand, Forex fire back out. You can see the last up before the down, we've come out of the supply zone. Okay, as we've come out of the supply zone, we've come back to retest. Okay, we go over this on the supply and demand area. Break out the fibs of the quad area. Look what's done. It's come in. It's not only just surpassed the 50%, which again is my magic area. It's where I go for on sort of entry on my supply and demands. 25 is giving you a better bargain basement sort of sell on this occasion. Okay, so what you could have done, and again, I mean, I'll go on about how these positions and how these candles work in a moment. If you'd went for a bargain basement, okay, you would have set your stop just above there, which is 3%, a 3 or 4 pip stop loss, and then you could have possibly brought it down to these equals here. This is the scalping technique that they say the equals here. Got a trend line, and we'll go to that structure point. Okay, there's a risk of 1 to 4. Okay, now how confident am I on this particular technique? I'm quite confident and very confident, to be fair, simply because we are looking structurally at an area of liquidity. Okay, now this is the key. This is the key. If we go back to that 1 hour, which is where we were initially looking for, okay, we had liquidity area here broken. Okay, let's just maximize that. We had a liquidity area here broken. Let's move this back along. You can see that there just by a pip or a pipette. Now, what I tend to be looking for is if you fixate your area to this here, okay? If this comes up and grabs liquidity in this occasion on the high side, okay, and then the candle sort of on this one, this candle here, the blue, and this candle second to it sort of stays within the body, which means the body of the top to the bottom. In fact, the second candle to the liquidity grab candle can go as far down as that if it wants to. However, it's best if it stays quite near, because what you would be doing is generally, I'm just going to get rid of some of this noise here as well, just to show you. Get rid of the noise. Get rid of the noise. You've seen what you can do on the scalp going down to 15 minutes, but what you could also do, no, I just went and get rid of that. I need that back on. Right. Get rid of that. So as we've come up and grabbed the liquidity, okay, the candle had sort of ended here. Okay, so what we could be doing is looking for the short. You would base it upon that there. Your stop will be just above that there. This is a 20 pip. and then I would take it down to the structure point of there. There's a 1 to 2. However, we drilled it down to the 15 minute, giving you a better risk to reward. Again, if we go down to 15 minutes, just to go over it one more time. See, we had the liquidity grab on the 1 hour. From there, you're simply drawing out this area here. This was the candle, was the last up before the down, which was possibly going into the liquidity grab. Okay, as we've moved down, we've come out of the supply area, draw that zone up. Okay, and we've come out, we've come back into test. One of two things. You could have either ended on the 50%, have that just above here, there's a 5 pip stop loss, and then have this more or less down to this area here, that's a 1 to 2.68. However, you could make it tighter and get a bargain basement of just over 3 pips. There's a 1 to 5. To come in, it's ended, to come out, it's triggered off. Okay. And if we just do it there, that's a little bit of a quick analysis. It's a quick rundown, but I want to try and sort of implement this a bit more better, a bit more structurally wise for you, because it can be a little much to take in. But once you get used to the parameters and the areas where you have your equal highs or your equal lows, you're simply waiting for a candle to push its nose out with a wick, okay, continue its way up, but the next candle to sort of not come down past that wick, if that makes sense, because then you've got the continuation down, or on the upside will be the continuation up. I hope that's making a little bit of sense. I just need to wrap my head around it a little bit better. It does have a good success rate. It gives you a much more defined area to set your stop loss, because I see a lot of people sort of doing scalpings and things like that where they are not setting any stop losses. They'll sit and wait at the computer and watch, and this is where your over leveraging and over trading comes into play. You'll watch the trade forever and a day, and the emotions start to kick in. Whereas with this, you've got the wick, it's poked its nose out, it's confirming it's took that liquidity on this occasion on that high side with that little wick that's come up there. I've then waited for that continuation, dropped it down to 15 minutes, put my supply area in there, marked off my zones with the fibs. You could have gotten in on that 50%, even better, bargain basement, the 25, because we work in the quarters within them zones. From there, we're looking for the push down to the next structure point, which on this occasion, it has given a fantastic risk to reward of 1 to 5. And if we go back onto the screen, just to show you all of this as well, just to show you how quick all this can happen, entry from here down to where we at. What was the entry from here? Down to here. You're looking around about 1 hour. 1 hour, that's all that trade was in there for. In, out, 5%. 5%. I mean, that is absolutely fantastic. And again, I'm going to be using that structure-wise. You're not going to win them all. You're going to get, in my opinion, you'll get a few more losses than what you would do on the higher time frame, simply because you've got little room for error on these scalping techniques. So again, I don't want anybody to be going into this and thinking it's going to be a magic sort of a magic way of trading. It's just something that I've sort of acquired and attained my eye to since I started my journey with smart money. I just have a canny sort of knack of understanding structure and understanding, obviously, when we get sort of breakouts or fake outs, if you want to call it, if there is going to be a continuation back down in the original way, there is that candle formation that you just simply look for. If it is, you're using the one candle which did give you that breakout as that area of your margin of entry to stop loss. Okay, so again, no homework this week. It's just something I'm trying to work upon to bring my own unique way to the group on smart money scalping. Okay, this isn't just scalping, it'll be smart money scalping. Okay, guys. So again, let us know what you think in the comments, and then we'll sort possibly this out next week for you. Hi guys, John here for part 2 of the initial video, which is based upon the smart money scalping. Okay, I've left it a little bit. I've gone back to the trade where we would drill it down from the 1 hour to the 15-minute, and I'm just going to share the screen. I'm going to show you. So this will be the end of this part here. We drilled it down from the 1 hour down to the 15-minute. Okay, identified an area where we had a supply zone. Okay, now if you notice, again, I got you guys to sort of do homework the other week based upon identifying consolidation zone. Look at that there. This is a consolidation zone. So again, it's just giving us an extra confluence on why I'm getting you guys to identify these areas. I'm going to be bringing in these unique ways of sort of helping you structurally identify certain things. Okay, so again, I'm just going to get rid of that. You can see from here, okay, we look at the structure point, look to the left of a structure point, to the left of this candle where the supply area is. Okay, the last down, the big push was this one here. Okay, so that's liquidity there. Liquidity was taken here. Okay, so if you look, this is basically a bit of a signature pattern. Okay, you've got liquidity taken on the high side to come down, liquidity taken on the lower side, it's come back up and pushed, and it's ended around about on the side. Now, just out of curiosity, if I do that, because that is a signature pattern, and again, this is recorded, but it is done raw and unedited. Let's do that. We can see, look at this, guys. There's the money zone, the orange part. It's come back in from a signature pattern. It's come in and it's ended right on here. Not once, but twice. Okay. Now, again, this isn't a magic or the magic potion or the magic strategy. I've just shown you there from 3 different concepts on confluence-wise on how this works. You've seen the supply and demand, the quadrant points. It's working. Smart money, liquidity, it's been taken, it's come down. It's working on that concept because we are looking for that liquidity grab. And finally, the main bigger picture as we do as a whole, signature pattern wise, which is one of the 3 patterns we learn, especially if you are with the bigger picture we are with from the EFX sort of things. This is just giving us confluence on this has been part of a condensed signature pattern within that. And again, it does take a lot on the trained eye to identify structurally these sort of points in such a small space and in a smaller time frame, if that makes sense. And as you can see, we get this forexfire magic wand out. Okay, we had the entry up on the top. It's come down. It's met the parameter there. Again, risk to reward wise, I'm just going to see what that is. To be fair, let's have a look. Short position. So that would have been your entry. Stop loss would have just been above the pips. Okay. Structure point wise, it's right on there. Wasn't quite a 1 to 5. What's happened is you've ended here. It's come down, touched. It's given you that 1 to 4.82. But look, it's come back up, retested again on that area. It's come back down again straight away on the same candle. There's 2 lots of 4.8. So it's nearly a 10%, nearly a 10% sort of 10% gain. Sorry about that one, the littlest ones there. So again, 2 lots of 4.8, 4.82s, fantastic stuff. And again, this isn't just something that is a fluke. This is given us in conjunction and confluence with regards to supply and demand, which I'm teaching you within the group, and also the bigger picture, the smart money concept. I'm going to be going into these with a little bit more detail on how to try and identify them. I just need to get this correct for everybody because, again, there's very little margin for error because you're you're technically looking at smaller pips within a stop. Okay, guys. So hopefully you found that a little bit more educational, informational. This will be coming in time as we advance more in the stages. Again, I urge everybody that's just new to joining, go through all the homework sessions, apply what we are doing in those homework sessions. You'll see them on the left-hand side. If you're stuck, reach out to myself or one of the mods. I'm sure one of us will get back to you as soon as we've got the availability to do that. I hope you're enjoying the group. If there's anything else you'd like more for me to cover, if I know anything about it, I'll certainly do stuff on that. If I don't, I'll go and find the answer. I'll go and find the answer for you, and I'll bring it back to you. Okay. So again, thank you everybody that's commenting, liking, and engaging. Hopefully this is going to help you sort of, again, identify these liquidity areas in a more confined space within those consolidation. Because after all, we were always taught on a retail aspect, never to trade when you've got consolidation. My opinion now, after my eyes have been opened up and being able to see everything, that is the best time to get in on a trade. You've got to identify structurally the liquidity areas, and you've got to wait for that wick to poke its nose out to then start looking at what that next candle to the right-hand side is going to produce. And if it gives you the right candle formation, bang, you're straight in on a really, really good risk to reward trade. So again, thank you very much. I hope you're enjoying the content in the group.